Welcome, Tradespooners, to tonight's pick. We're going to take a look at, for February 14th, 2014, long Lexmark International Incorporated, ticker symbol LXK. And let's take a look at the proprietary ratings here at Tradespoon. The risk reward is on the low end at 3, and we have the value momentum on the high end at 8 on that 1 to 10 scale. Now, you can always take a look at the detailed analysis, both technical and fundamental, that we do here on our proprietary Tradespoon report by just clicking here on the analysis report. Let's take a look at the price and option information down here below. We have Lexmark actually trading at, on the close, on the 13th of 41.06. That is right off of those 52-week highs of 41.45. So the momentum has been to the upside and well off those lows of 21.65 over the last 52 weeks. You see that the implied volatility change, we're about 40% off of the low. So we're starting to see that there's an increase coming in right now of heightened expectation of movement. So we're going to keep an eye on that. The return on capital on the option strategy is 90%. The probability of success is right around 55%. And the estimated move into March expiration is at 225 for utilizing the options. Taking a look at the stock trade, we're going to put a buy limit order in to buy stock, LXK ticker symbol, for a limit price of 41.06 or better. If we are filled, we're going to put a sell price $4.10 above, so we're going to get out right around that $45 mark, and we'll have that sell limit good until cancel. We're also going to risk $4.10, so if the stock does turn and goes to the downside, we're going to cut our losses right around that $37 mark, and we're going to have a sell stop limit down there working good till cancel as well. And as always, use pertinent risk in capital management. In other words, only utilizing about 3 to maybe 5% in the stock position. And as always, looking at the value momentum and the risk reward, we're seeing that we have decent ratings on the value momentum on the low end of the risk reward. So we want to be very prudent on that. On the options trade, we're going to be looking at buying the March of 2014 $41 calls. Those expire on 3/22 of 2014. We're going to put a limit price to buy these calls in at $1.15. Once we are filled at $1.15 or better, we're going to put a sell limit order above our entry price. So we're going to put it in at $2.30. That's $1.15 higher. That's that target gain. So, and our max loss is what we're paying for that particular strategy right now, $1.15 or $115 per contract. And again, use somewhere between 2.5% and tops 10% of your percentage buying power or cash available. Now, if you want to look at a spread strategy, we're going to take a look at a bull put spread. It's actually a credit spread. So we're going to be selling the $41 puts, which is slightly below where the market's trading at 41 and some change, or right at the money. We're going to be selling the March $41 puts and collect $1.40. So that's our credit. Now, we don't want to have that risk to the downside beyond $40, so we're going to buy the March $40 puts for 95 cents. So that's our protection. That's going to reduce our credit to 45 cents. That's our max profit. Now, the difference between the strike prices is $1. So if we subtract out our credit we have $55 of risk in this particular strategy. Now, we're going to put a sell limit in, we're going to put a buy stop limit in at 90 cents. What that means is if this spread, in other words, the market starts to come down and these puts start to increase in value, we're going to cut out of this spread at a buy stop limit of 90 cents. That means that we'll trigger an order to buy to close this particular strategy at 90 cents. That's what a buy stop limit is. We're saying we're going to trigger a limit order to buy this particular position back at 90 cents. Now, we do have defined risk, but we're trying to get out with at least, with only, trying to capture at least 10 cents and not take the total risk. And as always, if you've never traded one of these strategies, use our proprietary virtual trade here at Tradespoon. Taking a look at further background information, you see that the stock has been trending up nicely, especially since the first of the year. It really just has come off in the middle of January, end of January, into February, so it's performing strong. And we need to keep an eye on the fundamental and technical components. And also, we're not seeing that there are any earnings announcements, but we see that the fundamental analysis that's come here, and we want to keep an eye on that, especially since implied volatility has been on the move. And any news and commentary that's come up as we brought in this particular pick is going to be listed right here under the news and commentary. All right, folks, that's it for today. And as always, if you need any help, please email us at info@tradespoon.com. Well, have a great trading day and a great weekend. This is the pick for February 14th, 2014. We will see you in a new trading week next week. Take care.